Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
Pretty well. How are you?
I'm doing well, man. Thank you for bringing this stock information, technical analysis to the channel. It's something that I am trying to learn, so thank you very much for that. But man, what an exciting time to come to the channel because the market is showing some convulsions and lots of stuff is going on. So why don't you kind of talk about what you see going on and then maybe what happened on Friday?
Yeah, absolutely. I'm going to share my screen and I'll show you the S&P, what that looks like.
Okay.
And I talked about this before about the reversion to the mean.
Mm-hmm.
You can see it right here.
Yep.
So we had a big sell-off starting in the beginning of January. The market hit a high at about 4,800. This is the S&P.
Okay.
And then it sold off and went all the way down here to 4,300. And then it bounced and started back up again. And a lot of people thought, oh, that's it, we're done. But typically markets act kind of, think of it sort of like a rubber band.
Yeah. Okay.
Where it will extend beyond either on the top or the bottom, beyond the mean or the central point, the center line.
Yeah.
In this case, the center line is this blue dotted line. It's a 21-day moving average.
Okay.
And then it will revert back to that mean, sometimes going beyond it, and then revert back again.
Okay.
So what happened over the last couple of months is we had a long run up to that high at 4,800. Starting in January, we started coming back down. We got down here to 4,300, bounced around a little bit. And you can see right back here in October of last year, 4,300 was a critical support level as well.
Okay.
Right?
Yep.
So it was pretty clear that it would probably be another support level again, and it was.
Okay.
That's why I have this circle, 4,300. It's a very important level.
Okay.
And we bounced there and went back to the mean again. Now, I said on LinkedIn and in my newsletter, I said, we're probably going back to the mean, and then we're going to start another leg down.
Interesting.
And what I'm looking for, or I've been looking for, I'll actually draw this in so you can see it.
Okay.
Is lower highs. So here's the high up here.
Yeah.
We draw that across the highs like that.
Yep.
You can see we came down to the mean, went up, hit there, came back down past the mean, went way down here, came back up and hit it again, and then bounced back down. So we're in the process of making lower highs.
Got it.
Which is the definition of a downtrend.
Got it.
Which means we're not done yet.
Yeah, and I just wanted to see where 4,300 is at today. We closed Friday at 4,418, so we're about what, 3% away.
That's right. So we closed right there. You can see that little mark on the right hand side. That's where we closed Friday. Okay. And you can see we bounced and we started coming down pretty quickly.
Yeah.
So 4,300 is really important. If we get there, maybe Monday even, the market is going to be very oversold.
Interesting.
And we may get a rally, a reaction rally briefly. It may start to come back up. It also closed on Friday below the 200-day moving average. That's this dotted line, this gray line right here.
Yep.
That the 200 and the 50, which is this red dotted line, are the ones that all the hedge funds and the big institutions use. And that's what the algorithms use to trigger their algorithms. Okay. So because we closed below the 200 on Friday, that is not a good sign. It's a very weak market and another indication that we're in a downtrend. So
so a downtrend has been validated in the S&P 500.
Correct.
Okay.
And then if we look at Friday's action, this is a 1-minute chart.
Woo! Russia news.
So this is 2 days. This goes back Thursday. So Thursday we got back up here again.
Yeah.
And then all day Thursday, pretty much we're selling off. Friday, we started selling off a little bit again as well. And then the Russia news came out and it just plummeted.
Yeah.
And even at the close, you can see the close right here on Friday, it was heading down again.
It was a pretty weak close. Yeah. Okay.
Yeah. So, we may still be headed further down. Now, again, we may get a reaction rally because markets don't go in a straight line typically.
Yep.
So at some point we'll be oversold and we'll get a bounce back up, but it probably won't be as high as the previous high.
Yeah.
And then
Okay.
finally, let me show you this is essentially an 18-year chart. Because I want to make sure everyone understands it feels bad right now. The market's going down and we hit this big high up here.
Yeah.
And it will feel especially bad to people that bought up at that
Yeah.
high, right?
Yeah.
Thinking that the market is just going to keep going forever. But if you step back and look at it from a longer term perspective, we are in a secular bull market.
Mhm.
Okay. And this secular bull market started, you can debate when it actually started. You could say it started in 2009 when we bounced off of that bottom right there.
Okay.
But we were in a 13-year secular bear market at that point, starting back in 2000, the dot-com crash.
Yep.
Now, even though from 2003 till 2007, we had this big uptrend right here,
Yep.
we did not get above that 2000 high.
No.
So even though we had this is called a cyclical bull market.
Okay.
So it's a bull market inside of a bear market.
Got it.
All right. So we never broke that high right there. And then 2008, we started back down again.
Okay.
Now, a lot of people can say, well, that was a complete surprise, the financial crisis, and who could have predicted that the market was going to go that low?
Yeah.
Well, if you understand technical analysis, you would have known that this is a major resistance level.
Right.
And at a minimum, we were going down, but it went down pretty significantly and came back. And it didn't break this line, this 13-year line, until 2013.
Wow.
So that's where I would put the current bull market.
Okay.
Part of it, even though it really started in 2009 back here.
Yeah.
But it actually broke out
right.
and didn't start back down again. It broke out of this resistance level there in 2013.
Okay.
All right.
Yep.
Now, secular bull markets usually last 18 years.
Okay.
So if this one started in 2013, or even if you count it from 2009, we've got until 2027 or 2033, somewhere around 2030, let's say.
Okay.
Somewhere in that range that this secular bull market will continue.
Okay.
Now, if you look at the line for this bull market, which I drew in right here, and other than the COVID crash that went through it briefly, but not for very long, came right back again, it's pretty much respected this bull trend. Okay. So look how far we have to come from where we are right now to break that secular bull market.
Wow. What did I say? We're at 40. What are we at? 4,400?
We're at 4,400, 4,300 that I talked about is this red line right here.
Yeah. Okay.
Right around 3,000 is where this bull market trend line is.
Jeez, that'd be a wake-up call.
That's a long way to go to break that secular bull.
That's 30%. I got that right? Roughly?
No, right here, 20% off the high is at 38.50 right here.
Oh no, so that's the high, not where we are today.
Right. Where we yeah, this is 38.50 is from the high, 20% off the high.
Got it. Okay.
So if you went down here, it might be roughly 50%. No, it's not 50. It's
40.
It's maybe 40%. Yeah, about 40%. Right.
All right.
This by the way, these lines here are Fibonacci levels. I don't know if you know anything about Fibonacci, but Fibonacci was a mathematician.
Yep.
Years ago, and recognized things, patterns in nature.
Yep.
So flower petals, waves in the ocean, all kinds of things have Fibonacci numbers attached to them.
Yeah.
And the moving average lines that I use, the 8, the 21, 89, 34, those are all Fibonacci numbers. That's why I use those moving averages. Okay. But this is a Fibonacci retracement right here down to where that bull trend is right now.
Right.
And if you look at that, the 50% level for this retracement is at 38.84.
Okay.
And 38.50 is 20%, which is the definition of a bear market. Okay. So if we break the 4,300 level, which I think we're going to, right, then I think 37 to 3,800 down here is where the target is.
So that's about 20% from where we are right now, roughly.
No, 20% off the high, which is way up here.
No, but we're at 4,400 today, right?
We're at 4,400, right?
And you're calling, what was the number again?
3,700,
All right, so it's 17, 18% from
Right.
where we are today.
right?
Okay, all right.
But the important thing to understand is that it still will be within this secular bull market. So
And-
what I think is going to happen
Mhm.
the rest of this year with inflation and with the Fed raising rates
Yep,
and with Ukraine and a lot of other things that are going on,
yep,
we're going to continue to sell off for a while,
sure.
maybe even till third quarter, fourth
Okay.
quarter,
All right.
and then we're going to get a major bounce, and we're going to resume this bull trend.
And that's because these, in your experience, they last 18 years. So this is just
Right.
some pain intercycle. Okay.
This is a cyclical bear market inside of a secular bull market.
Okay. All right. Well, this is good news because we will be talking most Sundays about what's going on. Any other thoughts about what we might be looking at or where we're at right now?
No, I mean, I would expect I wouldn't be buying anything right now unless it's very short term.
Right.
I did buy some GBTC, which is a ETF for Bitcoin,
Right.
and that did pretty well. And then Bitcoin started to roll over on Friday, so I got out. I think I was up maybe 9 or 10% for the
Yeah.
week.
And then folks, Dan talked about that last week. Go back to the playlist. He talked about a trade he was doing. So he got in and out and made 8%, you said?
Yeah, between
Yeah.
8 and 9, something like that.
Yeah, not bad for how many days were you in it?
4 days.
4 days. Yeah, there you go. Not bad. Very, very cool. Any other closing thoughts?
Nope. That's the way it looks right now. I mean, things always change.
There you go.
We'll see what happens next week.
Yep.
See what happens with Russia.
Yeah,
Russia, I think is going to, if they do invade, I think it will send the market lower.
of course.
Those types of events typically don't last very long
Yeah.
from a market perspective.
Yeah, from my experience, again, somebody's been tracking the consumer, it's very predictable, right? Fear will reign.
Mm-hmm.
Fear means quick decisions, lots, in this case, lots of selling probably.
Right.
And then the adults will enter the room and figure out really where we're at and see how bad or long it would last. And you could get a vicious snapback, or if it's going to get ugly and it becomes something bigger, a lot more pain. So lots of stuff to evaluate.
Right. But we won't break this secular bull market until we get all the way down here. So that's a
Wow.
lot of pain. That's a lot of pain to go through.
That is
spot
a
up here.
lot of pain. Yeah.
But it's interesting that it still won't break the bull market.
Yeah. Very cool, Dan. Well, thank you very much for doing this. Topic number 3, we'll talk about what happened in my account, what we might be doing next week. Thanks, bud.
All right. Sounds good.
Mhm.